today's video is on getting a mortgage when you are new to Canada. We're going to go over the key differences in income, down payment, and creditworthiness. And we're also going to go over the key information and documents that you will need. Don't forget to like and comment if you like this video, and subscribe if you're looking for more informational videos on mortgages. First, we will need to show documentation relating to your status in Canada, so you can either have a work permit or a permanent residency status. We will also require you to be an immigrant or new to Canada within 60 months, so that's 5 years. Then, for any mortgage, we look at three main things when qualifying you. We look at your income, your down payment, and your creditworthiness. So it's pretty similar to how you would qualify for a regular mortgage. We take a look at your income. So if you are salary or guaranteed hourly, you'll need a recent pay stub and a letter of employment. So the key thing with the letter of employment here is you need to have at least 3 months at that job, and you need to be off probation, and it needs to state that on the employment letter. So you would have to wait for at least 3 months to be able to use that income. Keep in mind you may be exempt from this 3-month probationary period if you are doing a corporate transfer, and we would view that on a case-by-case basis. Next, we would talk about salary and commission or fluctuating income. So this is where it gets a little tricky. If you are moving and freshly new to Canada, and you are self-employed or fluctuating income, then we'd have to do a 2-year average, and that rule still applies. However, if you've been in Canada for over 2 years and you've been doing this job for 2 years, we would be able to use that income, and all we would do is have to do a 2-year average, and that's the income we could use on your application. Next, we would look at your down payment and closing costs. So this would have to come from a traditional source of down payment. This could include your own savings or investments, and would have to be in your account for 90 days or longer. A non-repayable gift from an immediate family member, or it could come from a sale of an existing property or asset. So please keep in mind that you also have to show 1.5% of your closing costs. So this is your lawyer fees, your property taxes, moving costs, appraisals, etc. So this is ideally would come from your own savings. If it comes from your own savings, this does give a little bit of strength to the deal. If you don't have the ability to do that, we can assess that at the time. And finally, we'll take a look at your credit worthiness. So at least one borrower on the application should have a credit score of 600 or higher. If this is not available, we will look at alternative methods. So they would probably want 12 months of rent being paid along with 12 months of something else. So for example, that could be a utility bill, insurance, a phone bill, childcare, something along those lines. And we may look at international credit bureaus as well. This is on a case-by-case basis, so just let us know about that. So for the most part, applying for a mortgage when you are new to Canada is pretty similar to that of being a citizen. The only difference is the documentation you need to provide for your status, whether you're work permit or permanent resident. And then for income, down payment, and creditworthiness. So depending on how much you have established here, we could work on that in a case-by-case basis. And then you would also have to be here for less than 60 months or 5 years. So if you have any questions, always feel free to reach out. Remember to like, comment, and subscribe on the channel, and we'll see you guys soon.